All right. Good morning, everybody. Kind of got some big stuff today. So we have the 10-year bond auction. It's one of my babies. I like the 10-year auction, but really any of the auctions that we get, you want to pay attention to them. It seems like a lot of times I'm the only one that ever talks about these auctions, and I get it. Most of the time they come and go. We don't see a reaction. They're not a big deal. But there's times where I've seen them hit the market and everybody else is looking around asking, man, what the heck was that? What moved us? The auction. So some of the big ones is the 10-year and the 30-year. It's worth paying attention to when you see those on the table. We've got VIX expiration at 9 a.m. That one is more routine, yet also overlooked a lot of times. And we have the potential always on Wednesdays with the EIA crude report. I believe that the Strategic Petroleum Reserve has been restocked, should be good there, but we'll see some numbers today, kind of get a feel for what's going on. Fuel in my area is like $2 a gallon, $1.99 in some spots. It's crazy low. And the government makes, a pretty little penny buying low and refilling their stockpiles when it's low and then selling it when it's high. We have Christine Lagarde over in Europe. This is not anything really big. It's a welcome address, so not expecting much out of that. We got Michael Barr testifying in DC. Lisa Cook delivering a speech about outlook and policy. That one, with Barr testifying, some of the biggest foot in mouth blunders I've seen with the Fed have come when they're in DC, either inadvertently or on purpose, saying something that they later say, oh, I wasn't planning on saying that. It just slipped out, came out, accident. Right. So anytime you see that there's a Fed member testifying, it's worth being aware of any sort of gotchas being taken out of context, having the market make some violent moves because the algos are going to trade what it gets. And then overnight, we've got Japan. So this one also is just delivering remarks. Not sure how big that one's going to be, but know what you own, I guess, is a good way to think about it. And of course, NVIDIA, but I really felt like I didn't even need to say that since everybody is looking at NVIDIA. It's not something that suddenly snuck up on all of us. Hong Kong down 0.25%, with the NASDAQ up almost 0.25%, and everything else just kind of chopping around through the middle, waiting. And that's been the base case all week, is that we were going to wait on NVIDIA's earnings before we really did anything, that we could dip a little lower, maybe go a little higher, but we were just going to hold this range waiting on NVIDIA. It's what we have done for the last few earnings, and it's not looking like, this is any different. There was others Fed speakers, but like this one is at 4 o'clock. And it's just participates in a conversation at an event by, you see, that one's not going to be a big deal, so I didn't bring it up. Same thing with this guy here from the ECB. He's going to be at the same conference as Christine Lagarde is here. So is like, hers is very likely not going to be a big deal, and his also very likely. This is the dinner part at this point. that later in the day, very likely not going to be a big deal. So I didn't mention those, but they are on the table. That's a number worth paying attention to as well. Polling right now suggests that 94 out of 106 economists are expecting a cut in December. The numbers need to clean up quite a bit if we're going to get that cut. You know, just what I've been hearing is that there's the potential for one more cut out of the next two meetings, but it could be December or the one after that. The numbers we got yesterday from the state side on jobs kind of helped reinforce the idea that this cut would be okay, that it wouldn't really jack anything up. So, yeah, maybe. We can always go to the Fed Fund Watch and check for ourselves, right? You don't have to wait for a headline to give you what the market is pricing in when it comes to rate cuts. One day estimated move 5,900 on the downside. Of course, I'm rounding just a little bit, and 59.75 on the upside. It's your one day expected move. To get there, we'd have to break through the volatility trigger and the zero gamma to get to the downside. All right, this is a perspective on the anchor to VWAP. The cyan line here is for the month of November. We're back above it after getting through it on Friday. Stayed underneath it until yesterday. We finally got above it, so we're back up on the top side. The purple one here is the start of the week. So, you know, it's a weekly anchored VWAP. And then, of course, the white one is today's. The point here is on the weekly and the monthly, we're above both. And we're keeping it at the moment. We really need to stay above these levels. And that's kind of the expectation. If we're holding the line and waiting on NVIDIA, and Friday was the line that we were expected to hold within, well, we're still doing that. And Friday was a really big range. So it wasn't much of an ask to stay within that range. Little dip below, but we came back out of it really fast. And now we're just doing the thing in the middle. We are above the midpoint, however, and we need to keep above that midpoint. It's very likely we're going to, just waiting on data today. "21-day average daily range is now up to 1.1%. It's continuing to expand. So it still hasn't begun to collapse back. This is the distance from 6 p.m. open, and we could go 0.55 higher and 0.55 lower. That would equal 1.10% between these two lines. Or we can go 1.1% in a single direction, and that would get us to the yellow line. That's your ADR lines. At this point, we're slightly closer to the upper edge than we are the lower edge, but we've got data on the table for this morning. If we were a lot closer to it, then the base case argument would be that we would go ahead and hit the upper edge or the lower edge, whichever one we're closer to. But we really don't have any feel for it this morning, one way or the other. When we did get closer to it earlier, when we had an inside day breakout of yesterday's range, it didn't stick. We came right back in again. We're just flirting with VWAP back and forth. If we're looking for reciprocation, then what we get on the bottom, we'll expect on the top, and we'll just hold this sort of zipper pattern while we wait on data. Back above the weekly pivot, mentioned yesterday that that would be the target if we continued the move to the upside, and that it would be difficult to get through. At first shot, we were rejected, came right back down, tried it again, finally got above it. Now it's holding. It's going to act a bit like structure at this point, and we won't look for it to be support or resistance until we leave this sort of zone here. Doesn't really draw out well. We'll need to leave this zone now for it to start acting like support and resistance again. Otherwise, we can just keep crossing back and forth through that level. Still, it was a good target to aim for. It gave us some, some perspective on where we are on the week and a level that we needed to get through. So we've gotten through it. Just because we go back down underneath it isn't going to be a big deal until we get too far away from it. If you want some exact levels, it would be whatever we have above it, measure that to the downside and mark your line, and it'll be equal. Me, I'm just going to be a little lax about it. We've got 59.32 cog line down here. And as long as we don't close underneath that, then we can just stay here crisscrossing this thing back and forth. Today's central pivot is almost in line with yesterday's, but the channel is a lot bigger, which implies even if we do break out, we're not going to go anywhere, that the breakout won't stick, it'll fail, and we'll come back in again. Just remember that these channels, they don't make price do anything. It's giving us some ideas about what to expect if we do get a breakout or if we don't get a breakout, but it won't make us break out or not break out. Looking at the profile for the week, it's still a really tight range. The classic D shape with the point of control nested pretty well in the middle. We still have a significant air pocket of risk. It's likely if we break 58.50 that we'll see 57.50. A move to the upside puts us back on focus with the point of control at 60.20. Volume's at 80,000. It's absolutely nothing wrong with that. It's half as much volume as yesterday, but it's still really good volume. Everything is fine unless it drops below, like, say, 40 to 45,000 in the overnight. So 80 is good. It's fine. It's within the normal range. It is interesting to note, though, that it's half as much as what we had yesterday. So we're back above the 10-day moving average, still holding above the 20, the 3-week. We're back above the volatility trigger, 0 gamma. Got the put wall, which seems a lot closer to me for some reason, 58.24. And then we've got the call wall, 60.24. So, I think it's been a while that we've had all the levels where we could see it on the screen without compressing the chart and kind of, moving it around and squeezing it, trying to find levels farther away. They're all kind of coming together, but so are all the moving averages. So we've got the 10 coming in, the 20, and then the 10-week tightening up. Then the volatility trigger, 0 gamma, call wall, everything just all coming in together. That sort of entanglement can help keep us sideways while we digest a big move like we had after the election, or can help us hold the line sideways while we're waiting on something like NVIDIA's earnings. It'll act a lot like a squeeze function, so that when we do come out of it, it's likely to be significant. Still not expecting anything from the point of control when it comes to any sort of move or change. The base case argument is that it's going to end up around this 59.20 area. But for that to happen, we're still going to need to take away more of these days up here. And we won't even reach that level until Friday or even Monday of next week. Once we start taking out that volume, then we'll see that level diminish. And of course, what'll be left is the biggest one on the table. Unless we stay somewhere between now and then and start to build out a new high volume level, HVL, then it's possible that the point of control could move somewhere else. Otherwise, 59.20 seems likely. We got a new VPOC from yesterday. So we still have the one overhead, 59.94. We're adding another one at the cog line, 59.32, close enough. So for me, this one's pretty much worthless because I'm already looking at 59.32. But if you weren't, got a VPOC down there. All right, so we're back above the 10-day. Kind of like a wave. We've gone underneath. Now we're headed back up again. This is common. It's just the way things generally work. How high of a wave we're going to get remains to be seen. We had set the high back here, and then, we're getting that lower high, and now we've got the new high again. So, 1% above the 10-day moving average, or say 1.5, just less than that peak would be the expectation. And the peak, call it 2.25. So 1.5, 1.75, that'd be a good level to focus on. The idea behind that is how far out of the money to put your credit spreads, or if you're reading Spot Gamma and you see that they're recommending long options rather than short options right now, where you would want to buy your call debit spread for something like the SPY or the SPX. All right, the VIX is still up close to 13% over a 5-day period, even being down this morning 1.25. They're gonna VIX expires at 9 this morning, right? We have that VIX expiry. And if you read the founder's note from last night from Spot Gamma, they did warn on this. Just be anticipating a little bit of violence there. Bonds are down with TLT, gold miners, all down 6.5% now on gold miners over a 5-day period. Airlines still down. Delta Airlines had some negative news out this morning that took it even lower. UAL looks, ripe for that play, but UAL, Jets, DAL, kind of just take your pick. They're all bleeding. Looking at what's up. What's up? Bitcoin, China ADRs, semiconductors, uranium, if it can give us just 1% more. And uranium is up, close to 8% over a 5-day period. This thing needs to calm down a little bit. It's supposed to be slow and boring, and not making big parabolic face ripping moves. So you don't want to see that one get out of control. Otherwise, we got the Mag 7 up after being down more than 3.5%. We're getting a little bit of bump there. And Bitcoin, it's still up 3% over a 5-day period. MSTR is moving so violently that the put that I had bought back on this day here, I closed yesterday with MSTR being way up here. Obviously, I was wrong, right? I bought a put and it went higher. That put lost 1 penny. That's it, 1 penny. Because the volatility has jacked up so much in the options on this thing that even though price is going higher and my put should have been losing, that its implied volatility increased so much that the Vega in that thing kept the value of it high enough that I was able to close my loser for a $1, 1 penny loss. This thing is very volatile right now, I guess is the point. There's been a lot of talk about the new Bitcoin ETF, the IBIT, I believe it is, that just got options. It just got options. So sure, we were seeing a lot of those coming in yesterday, but it doesn't have weeklies yet. And a lot of the positioning that you're seeing is just your typical everyday institutional positioning. There's no edge to trying to read those options and get any sort of directional confirmation. If you do want to play a Bitcoin ETF that has at least weekly options and a little bit of liquidity, you can do better than IBIT. Two that I generally focus on is BITX, which is like a 2x leverage, and BITO, which is not a 2x leverage. But either one of those, at least they have weekly options, right? Company or a product earns weeklies by being liquid enough to have weeklies, that there's a demand enough that it has weeklies. If it doesn't have weeklies, there isn't even a demand, right? MSTR, Mara, ARC, GBTC, Riot, Coin, NVIDIA, all the Bitcoin names. I'm not seeing Hood yet, but the expectation is that Hood would do good too in this environment. Yeah, Hood's up as well. Trying to get an inside day breakout and a continuation. Square, PayPal, they're on this list, but not doing so hot this morning. For the China group, China ADRs, Baba, Baidu, JD, PDD, XPEV, all those guys, we're getting a move to the upside, but we fell really far really fast. So not much of a surprise that we may get a little bit of a bounce here on the round number, $30. just keep in mind the target or the destination is still year-to-date VWAP, that blue line down there. We're not ready to go long in that space in a duration play. There's always a short-term intraday, overnight kind of swing, but that'd be about it. Same thing with pot stocks. These things are just broken, continuing to bleed. If there's a move to the upside today, it's just a relief bounce. We're not looking to take these long yet. Uranium's still trash. No interest in this. USO, we got the crude report today. So if you don't trade futures with the CL, then maybe you'd be interested in this. Most days, that Wednesday where we get the crude report, it's nothing, but sometimes we get something. So never hurts to look to see if we're going to get a lightning strike. FXI is up with K-Web constituents, the whole China group. A discrepancy in the pot stock space then, because we got one pot stock group up, the other one down. Silver, precious metals, staples. But these are algo prints on staples so far this morning. This isn't really flow, that's just a dot. So we want to see some flows start to confirm that move. Bonds still ain't ready. It's very likely that Target is bringing retail down. Although it's trying to recover a little bit, but they didn't like the Target report. Yeah, they are. They're getting smashed, and it's kind of washing away all the good that that Walmart gave yesterday. So we have a lot on the table today, and some of these, they're subtle, right? Like that VIX expiration and the crude report. They come around so often that people just really tend to overlook them. But that's when it happens, right? We'll have a day where they make moves, and then for maybe a month and a half, everybody's watching them really close, and then they get tired of watching them and they make a big move again. The idea behind that is when they're watching them, they usually hedge their positions. It doesn't matter which way they go, they won't get hurt. Once they quit hedging and they're not watching it as much, the move will put them off sides. They weren't hedged, they weren't ready, and then everybody's scrambling to either buy or sell something. And that aggressive move, because everybody's off sides, gives us the volatility that we're looking for. So who knows? Maybe we'll get something at 9 and at 10:30 or one or the other. Otherwise, certainly got issues at 10 a.m. with this Fed guy in Washington today, and maybe Lisa Cook at 11. So 10-year auction at 1. Lots of things that can screw all this up. Just keep in mind, the base case is still NVIDIA. On top of all of this, we could get a run to Friday's high if we want to get froggy and go up. And we can fall all the way down to the low of the week and overshoot that into a 111. But we're not expecting to go anywhere until NVIDIA. So if we get a breakout or we get a breakdown, we're still expecting to come back in and close within the range. That's what I got for you guys. Be careful, be safe, watch the clock. See y'all tomorrow.